Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The markets on Friday were very volatile after the data out of the US from the Personal Consumption Expenditures Price Index, or the PCE, an inflation gauge that the US Federal Reserve uses as a primary barometer, jumped to its highest level in 12 months. This posting a 40-year high in June, the Bureau of Economic Analysis reported on Friday. The Personal Consumption Expenditure Price Index rose by 6.8%, the biggest 12-month move since the 6.9% increase in 1982. On a monthly basis, the core was at 0.6%, its biggest monthly gain since April 2021. Now, with that being said, the US Federal Reserve officials largely focus on the core inflation, but have turned their interest recently on the headline numbers, as well as food and fuel prices have rallied in 2022. Earlier this month, data showed that the Consumer Price Index, or the CPI, rose by 9.1% from a year ago, the biggest gain since November 1981. Now, with that, the Fed prefers the PCE over the CPI as a broader measure of inflation pressures, as the CPI indicates that the change in the out-of-pocket expenditures of household products and so on and so forth, while the PCE index measures the price change in goods and services consumed by all households, as well as non-profit institution services households as well. This week we have a high impact data release, with the eyes looking to the RBA rate decision and also the RBA monetary policy statement. Along with that, we also have the US job numbers, that is the non-farm payrolls, and also the Bank of England rate decision. It is viewed that the RBA is expected to deliver its third consecutive 50 basis point rate hike this Tuesday, bringing the cash rate to 1.85 from 1.35. Along with that, we also have the Bank of England, which is widely to expect to hike its rates, also at 50 basis points this Tuesday, which will be seen the largest hike since 1995. Meanwhile, this Friday, non-farm payrolls report will also show whether employers kept hiring in July after 372,000 jobs were added in June, with the forecast currently holding around 250,000 jobs, and the unemployment rate is expected to hold steady at its historic low of 3.6. From the given whipsaw price action, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, did tumble from 105.95 and traded and closed at 105.60. Looking at the technical pattern, the Australian dollar is a little bit weaker due to the ups challenge on Friday, did reject the region of around or close to 70, 60, 65, and from this pattern here could see a little bit of a weaker play into the start of this week. The market is looking towards a possible pullback, that is towards 69.65 as minor, with the base holding roughly around 69.35. Overall, though, for the broader aspect from where we closed last week, the market is expected to continue its upward trek and therefore eventually reach its objective of around 60, 65 on 70 and reassess from there. Looking at the euro a little bit closer, we can see that this level at 102.70.80 is still posing a very much a tough challenge or a hurdle for the bulls. Nevertheless, I'm not going to give up or abandon this challenge to the top side yet, as I feel there is still a little bit more room to take the market to this level or even up towards its downtrend line, which is around 104 figure 30, and reassess from there. Any pullback should see support roughly around 101.65. Having taken a very heavy downturn on Thursday and Friday, you can see that the price action for dollar yen is easing up a little bit as it gets closer towards that bottom side of the range, roughly around 131.40.60. A little bit of a distance, and I can see, but from this region may actually eventually see some profit taking. I'm not going to get too bearish. I think the market's already made its move since taking out the trend line, which was around that 135 to 136 area, and now from the weakness possibly start seeing a little bit of demand coming back into the market as we get closer to the bottom side of this range. As I mentioned, all eyes on the Bank of England this Thursday, with an expected 50 base point rate hike. But you can see from the price action since the break of this trend, the market has actually took two challenges at this level here and rejected. Overall, I'm not going to abandon the bullish sentiment as of yet. The call is still towards 122 to 124 on a broader sense. In the meantime, though, any weakness should find support around the lows of 120, 40, 80 area, you can see here. The market continued its rally on Friday for gold as the market it reaches its objective of 1,765 and closed there. A little bit of a sort of a pause in the pattern, as you can see here that the 4 hour has actually reached the top with the indicators declining, so therefore could see a short-term pullback. In light of the pullback, may find support around 1,746 as a temporary base, and then maybe see a rebound from there and retest that top side of 65, and a clearance there will give further guidance towards 1,772 to 74 and reassess. Wrapping up with oil, the market took a stab at that top side level of 99.65, 95 area, as you can see, and was rejected. Not quite broken down as of yet. It was trading around $97 on the open this morning. I feel the market may most probably take another test to that top side, but likely to fail towards that 99. The broader aspect for myself is I like to probably look for positions around that top side, around $99 to $100 a barrel, and the base coming in around $92 a barrel. Well, that wraps it for the morning. Thank you very much for joining me. And as always, look out for the intraday report, and also keep an eye out for the end of the day wrap.